What's going on, traders? It's day number 33 of the $1,000 account challenge, and I need you to pay attention today. Watch this video all the way through because there is some really great stuff that we did in real time that's going to help you in the future. $1,000 account challenge, we are up $55 in the account, not including commissions today, bringing the total portfolio balance to $1,391. In 33 days, we have made nearly $400. That's trading with $100 to $200 per trade, not more than that. If I walked up to you and I said, could you use an extra $400 this month? You would probably say yes. So I'm just stressing that to show you the importance of small gains adding up over time. Let's get into the trades though. I only took 3 trades on SPY, 2 winning trades, 1 losing trade. SPY was a down gapper this morning from a negative reaction to a news catalyst. Look at that sell-off right there. So immediately I was thinking, this news catalyst is strong enough of a news catalyst that this just may continue to sell off all day long. But I wanted to be patient at the open. I said, well, let's see what we're going to get, right? Originally, it was a short idea under your pre-market lows at $546. So when SPY opens up and sells, you know what we do. Don't chase the move down, wait for the rally. But we're not tempted to short the rally because we don't know, maybe this could rally all the way back to the high of day. So I told the team, I said, looking at this on the 1-minute time frame, this to me looks like a proper bear flag formation. That's going to be your flag. Here's your flag pole. Let's look for this to break the uptrend trend line and continue the move lower. Now, we don't get confirmation to take this short until we get a break of the low of day. So we'll go ahead and put a trend line right there at the low of day. When we get the breakdown into the low of day, when we get the breakdown of the bear flag formation, when we get the continuation from the pre-market sell-off into the move lower, I said that's enough confirmation for us to take this short. So we go short right here on this candle with a stop loss placed just above, and we catch the move down lower into the low of day. Now, we might have sold too early, right? But hey, I'm a sucker for taking profits. 20% profit was offered. Why not? Let's go ahead and take it and get out of this trade, and we can look to re-enter. And that's exactly what we did. When this started to rally back up, I said, you know what? This news is so significant that I don't want to miss out on another opportunity to take this short. So I'm going to take this short with the idea to scale in up to 544.5. Now, how would I have known to scale in on that? Well, I'm using a tool known as the Fibonacci retracements tool, where I'm pulling a fib line from the beginning of the sell-off down to the bottom of the sell-off. This is going to give me these lines here, the 23.6 retracement and the 50% retracement. Oftentimes, when you get a significant move like this, stocks like to rally back up towards that 50% retracement line, reject, and then move lower. So my original plan here was to go short there, add to the position here, and then look for the move lower. And while that did work, here's what happened. Mid-trade, a couple of minutes after I took my entry, I saw this red candle, and I was thinking, you know what? Maybe this is just going to sell off into the low of day, and I won't have to add to this position at all. But when this red candle got bought back up, it spooked me, and I was like, I'm already green on the day from this trade over here. I don't want to risk those profits there, so let me just actually exit this trade. I took like a $5 loss. Let me just exit this trade right away, and I will re-enter if I get further confirmation. So despite this trade idea working, had I not exited the trade and had I added to the trade up here, yes, it would have worked. But despite it not working, I was fine with closing the trade out because I personally just felt uncomfortable during the middle of the trade. So I said, we're not going to let that panic us though, and we still will look for a re-entry, and that's exactly what we did. We noticed then that this was a second bear flag starting to form on SPY, and when SPY does reject the 50% retracement line and gives us the lower low, we go short on the lower high with a stop loss placed just above for the move back down into the low of day. This was yet another 20% trade here for us. Now, beyond that, we do get some news that pops SPY back up. It breaks this ultimate downtrend trend line here, enters into a phase of consolidation, at which point I told the team, I said, you can actually look to take this long over here for the move up, which absolutely worked. I did not take that trade because I just didn't trust it, and I was already so green on the day from over here, I didn't need to continue to press the envelope. But wow, what a day. So the key takeaways from this video today are understand the magnitude of the news that's being dropped, and don't be afraid to cut positions when you're feeling uncomfortable like I did with the second trade, because you can always re-enter after you get further confirmation. Up $55 in the account challenge today, one of the biggest gains that we've had in this account challenge so far, if not the biggest. And I'm very proud of the team and how they've been performing recently. Thank you all so much for your time. I do hope that this video has helped. If you'd like to join the team, the link to join is going to be in the description of this video. Sign up for the WAP. That'll give you access to the Discord server, and you can come trade live with us in the 1K account challenge. Start at any time with any amount. What's important is that you get in here and start learning this stuff with me. I give you in real time everything that you need to follow along on these trades with me. Again, thank you for your time. Enjoy the rest of your day, and I will see you tomorrow when we continue the $1,000 account challenge for day 34. Cheers.